I'm Ira Epstein with your morning flash update for this Monday, the 2nd of March already. Wow, 2020. I'm just amazed. We were 60 degrees over the weekend in Chicago. It was great. We are about 9:15 a.m. and as you can see at this moment, and believe me when I use the word moment, at this moment, most of the stock indices are higher. I went to bed, the markets were up dramatically. I woke up in the morning, they're down sharply, and I've been in the office now pretty early, and I have watched this market swing between positive gains, losses, all over the board. It is wild. Gold holding up actually pretty well as the dollar's getting hit, and we're getting a big rebound in a number of currencies against the U.S. dollar. Now, one of the events that the market is looking at is coordinated movement by the G7 as to helping the world economy. I, for one, am all for that. It is the question of timing that I have. It looks to me more and more as though China's seriousness with the corona may have peaked. You know, it's hard to tell. There could be that yin-yang where you get to Wuhan and it loses the cases and then they get them back. We've seen cases come back on people. So we're in uncharted territory, and I'm certainly not a doctor, but I am somebody that reads a lot. And I'm reading now that in a number of cities, Shanghai, Beijing, up to 70% of the people have returned to work. I look at markets like coffee. Coffee's got a bit in it. People will need that. I look at the things that people will need to give me an idea if things are getting back. Rebar, iron ore, where's this going? And I'm watching the futures markets in China coming back on it. So, interesting. So, I think what the G7 is looking for is the right timing of an event. What it is, we don't know. Is the Fed going to cut 50 basis points? The idea of a 25 basis point cut, if you watch the Fed watch page, is gone. Now the question is a 50 basis point cut, and moments ago there was a 95% probability that the next cut, when it comes, it could be this Wednesday according to some. It could be on the, I think the 17th, we have the two-day FOMC meeting. I don't know. But the market's looking forward to that. Energy prices up a bit. That's a good sign. The negative is you keep taking the bonds and notes and they keep dropping away real rates. Okay, but if you're going to get concerned and coerce intervention from the U.S., and other G7 members together, I guess interest rates would drop. So that's one way to look at it. Deflation may be setting in. That could be the bid in the metals. I'm just giving you ideas that I'm hearing going around. Now, when we look at the economic data, I don't know if it has any bearing at all right now because of COVID-19. Everybody's glued to that. But when we go to the non-manufacturing headline, we're at 50.1. We expected 50.5. Here's the importance. Any number under 50 is contraction. So we saw the non-manufacturing prices down to 45.9. We saw the orders contracting a bit, and employment slipped down a bit. The market group February manufacturing sector PMI was 50.8. 50.7 is where it was. The prelim came in at 50.8. They expected it. That's about stable. This is a big number, the January 2020 construction spending. It could be the largest I've seen, period. I don't recall it that big. And when you take a look at 2019, they revised that up from a prior down 0.2. So at home, all you need to do is look in the sky at any big city. You got cranes everywhere, so it gives you an idea that we're doing fine there. Now, the OECD group is a group based in Paris, and they give you an idea of what they expect world economies to be doing. And people look at this. They lowered China's growth rate to 4.9 from 5.7. Now, remember, they started China last year at about 6% growth was the shot, so they're down 1.1%. It's a lot, but it's not the worst that it could be. Their best case scenario, though, has the world economy growing by only 2.4%. That's weaker than their 2.9, and remember, that's their best case. So we'll have to see what goes on there. China's official manufacturing PMI tumbled to a 35.7 in February from 50. We knew that was coming. I don't think that number should be taken as much of anything. They shut down the country, and that's what you get from that. They're non-manufacturing. This number bothers me more than the manufacturing at 29.6 because that's retail sales. That's the cars that we know. It's other things that were going on, and that's all shut down. But as I said, if 70% of the people are going back into the big cities and they're slowly coming back to work, remember we only had a third about a week ago, that's double. Is once you get into the 80 percentile, it tells me that things are getting more normal. So we're going to see. The corona death toll has hit 3,000 on Monday. More have died, 89,000 infected. And that's with the test kits available. This is probably a lot bigger than that, but the deaths are a death, and that we can count. Eurozone economic data, 49.2 versus 49.1. January PMI, 47.9. And as you can see, Germany and France both holding in. So on their own, those parts were good. Now the question is, does that giant engine in China awaken so that we can get countries in Europe doing better, which in turn will help us? This is where maybe tips start fitting into you. And Modern Trader put out technical trading tips from the top pros. And this gives you the Gantt square method that you can look at, benefits of relative strength, trading with money flow, rules for bottom fishers. Let me give you the big rule for bottom fishing. Don't do it. I know their articles got all the things on it, and that's great. Having been in this industry 5 decades, let me tell you about bottom fishing and top fishing. The streets are littered with skeletons of those that do it. Trade the trend. And if you can't get a feel for the trend, what you do know is if you go bottom fishing, you're just picking a number. Now that has the right approach maybe with long-term stocks, things of that nature. But futures, because of the leverage, I'll let you decide what's right for you. But we have this, it's a PDF. Go to our website. You can also get our other free offerings. On the bottom right of the website, you're going to see it says free offerings. You can call my staff, they'll get it for you. You can click up here. If you're watching me on YouTube, it'll take you right there. With that, I'm Ira Epstein. I'll see you all this afternoon with our market wrap-ups. You have a great day.